Greetings, Algo artisans. Solana to 300, quite possibly. As a matter of fact, I put a trade out on Twitter and we're going to talk about it in the charts right now. Okay, so let's take a look at the Solana chart and then we'll take a look at what exactly this trade is. Now, the following trade idea, again, it's not investment advice. You need to make sure that you are doing your own research before you take any trades, right? So this is not for you to follow my trades. Okay, so we're actually going to start on the Bitcoin chart because the Solana trade is based on Bitcoin price action. What does that mean? Well, if you've been in crypto for a while, you're going to know that Bitcoin really makes a big decision as far as how the alts do. If Bitcoin is healthy, alts are healthy. If not, then not. And alts tend to be almost a leveraged version of Bitcoin, meaning they move up faster or they move down faster. And it's not always the case, but that's a pretty good way to look at it. So if Bitcoin is ready to break out, then Solana will be ready to break out. So let's take a quick look at Bitcoin and what I think is going to happen in the near term so that we can actually create our thesis on why I think Solana will break out. And this is going to include some price targets for Bitcoin, and this is going to include some information that you saw going back to this morning's show, but we'll go ahead and line it out for you. Let's start with the high time frame. On the high time frame, I'm going to take a look at this most recent impulse upwards, this big strong move going from 50,600 or so all the way up to the all-time high. I'm going to impose a Fibonacci extension over the top of that, and this is going to give us some targets to the upside. And the reason that I'm using this is because we don't have any prior data as to what happens with Bitcoin as price jumps above its all-time high, because it's the all-time high. There's no time price has ever been this high. So from my experience, the best tools to use for price forecast is going to be a Fibonacci extension in the manner that I just did. If you want to know more about how to do this, come to algofactory.tech and we will show you. In the meantime, the targets I have, and I've been public about this, if you've been watching me for a minute, you know this is the case, 80,000 and 88. I think those are two places that price will go next and possibly make kind of a stop off. What I also did here is I drew about 2 weeks ago, week and a half ago, this move up from 60,700. I predicted that, and I predicted a consolidation right here. You can go back through my videos or my Twitter. I did several victory laps about it. I'm not going to do it now, but this move up and this consolidation I predicted, and I predicted it pretty much on that timeline. So if you want to know how I'm doing this, come to algofactory.tech and I can show it to you. And if you want to see my predictions sooner than everybody else, come to algofactory.tech. I show them there oftentimes days or even weeks ahead of time. What's going to happen next? Well, there's a couple of things to look at. First of all, you have this move up right here from this low at the right shoulder, 60,200, moving all the way up to 71,800. And if I were to impose a Fibonacci extension on that as well, then we would end up with some topside targets at 75,200 and 79,300 roughly. So this Fibonacci extension yields these two targets at 75,200 and 79,278. So if I were to put on a trade based on this move up, ideally I would have gotten in before this move up, and we're going to show you that I was able to. That's going to happen in a few minutes here, and the targets would, and the trade would look like this. And that's a nice 5-to-1 trade. That's beautiful. That's risking, now that the stop loss might be a little deeper. I had it below some other supports, but basically you're looking at about a 4-to-1, 4.5-to-1 trade where you're risking, say, $100 to make 400 roughly. Now, this top target of this move at 79,100 is also confluential with this target at 80,000. It's right below that. So what I probably would do if I were taking a trade is I would go, as I showed you earlier with the trade this low, have my first targets at these two. I would ignore this upper target here at 80. I would take it to 79, and then I would extend the trade all the way up to this 88,000 point. And that's a beautiful 7-to-1 trade. Of course, taking profit on the way is going to reduce the 7-to-1 factor. It'll probably end up being a 6 or 5-to-1. Nonetheless, it's extremely attractive. So knowing all of this, understanding that this can happen is going to show us why Solana is a good trade. So here's the trade, and I posted it on Twitter, and basically Solana looks to do something very similar to Bitcoin. However, it does appear that Solana may be ready to go ahead and break out. Now, Solana, of course, has outperformed all year long. It's been an absolute beast compared to other cryptos. I mean, it does seem that this bull run, Solana Solana seems to be the narrative, going from $19 all the way up to about $200, more than a times 10 since October. As a matter of fact, I told my group about Solana back when it was below $20 last summer. I explained that just because FTX happened doesn't mean there's a problem with Solana. It meant that it was a problem with FTX. Solana's fundamentals remain sound. And of course, people who did their own research based on that and came up with a similar thesis were able to multiply their gains by times 15. So why is this insane risk to reward trade possible with Solana? Well, it's because Bitcoin is getting ready to break out. Solana has demonstrated that it has grabbed liquidity from its lower area, its lower range. It came down, it rejected off there. It even had some liquidity a little bit higher off which to reject. And all of the algos that you see on the bottom of the screen and across this panel of screens is also indicating that price is very bullish. So unless something majorly unexpected happens, price is going to want to continue to go up, and it's going to grab liquidity and do so. Well, this liquidity grab seems to be what is going to springboard and cause the next move up. And because this is a consolidation breakout trade, I'm able to put my stop loss based on this low level consolidation right here. So these higher levels are the same as with Bitcoin. I did a Fibonacci imposition right here, which yielded me these couple of targets, and I lowered these targets. I didn't have the 618 and the 272 because that would look like this. I actually brought those down because there is structure in the way to the left. Now, for the higher time frame trade, I'm not worried about this structure because it is a continuation trade. Continuation trades, you don't have to worry about it. This particular lower time frame trade is a continuation trade, and I am not worried about this structure right here. This peak right here is what I'm not worried about. However, because the continuation trade for these lower targets here is nothing to do with this area to the left, I do have to be concerned with those peaks right there because price will want to pivot at those quite possibly, especially if the market experiences some kind of shock during that trade. So I broke this up into two separate trades. One trade will take profit at these two lower targets. The next trade's at some higher targets. How did I come to create those targets? How did I come to that conclusion? Well, the way I did it is going to be better seen on a higher time frame. So on the weekly, I did just like I did with Bitcoin, and I did a Fibonacci extension, and I based it on this major extension up going back to last October. I know there's a pullback. It's not a pure impulse. However, whenever you zoom in on any pure impulse, it's going to look like this. So if you zoom out to a much higher time frame, that will be an impulse. So I'm going to treat it as such. The targets to the upside based on that impulse for the 272 and the 618, they're 261. However, that is just above the all-time high from last cycle. So I created a target lower at 255, and then I front run the next target up, the next target being 328. I just front run it by a few dollars, and that's how I've gotten this crazy trade with such massive RRR, and the trade up to these top targets is a separate trade from the one to the low targets. Now, I don't have to do it that way. It just has to do with the way that the trade desk was set up, but I do like to do it that way because I see it as a hedge. It doesn't cost me any more than fees, and it does help me separate things. So this is the trade. And again, I put this out on X, aka Twitter, not an hour ago. I'm in the trade myself, and it's a very high risk trade because when you have this much risk to reward, there's a good chance there's going to be a shock pushing price down before you can make it up to your target. However, based on where the market is and based on what we know about the 4-year cycle and the way things go, I do think this is quite possible, and it's also a very small position. You can afford to have very small positions when you have almost a 20 risk to reward. Now, by the time I take profit off, it'll be closer to like a 15 risk to reward or less. Still, that is incredibly massive, and as price goes up and breaks out, I will be adding to that position with some more significant numbers. So, that's the trade. I hope this video was helpful. If you want to learn how I do this, come on over to algofactory.tech. We're helping traders develop their own trading methods, otherwise known as an algorithm. Most traders are doing so manually. They don't need to know how to code, and neither do you. If you do know how to code, or if you want to have your algorithm coded so that it can trade without you being there, we can put you on the path to that as well. Come on over to algofactory.tech. We have people who are very happy with their progress building algos. As a matter of fact, let's hear from one of them right now.
Hey guys, so I've been in Algo Factory for around 10 months now. I held crypto, but I hadn't traded crypto or Forex before. Since joining, I've learned a massive amount that I use almost daily for trading, reading charts, using indicators, and understanding different aspects of the market. So I found the course incredibly easy to follow, and the interactive style of teaching is incredibly beneficial. So now that I'm comfortable in my trading ability, I'm starting to invest more capital, and projections are looking very promising. My goal is to be trading trading full-time in the future, which I believe is highly achievable. I've met an amazing community of like-minded people and made some great friends. In my opinion, both V and Cowboy go above and beyond, and I highly recommend joining Algo Factory. Thanks for everything, legends. Cheers.
Thanks for listening to that. Don't forget, algofactory.tech, trade your job, upgrade your life. We'll see you on the next one.